I'm learning a lot from you. I'm seeing your knowledge. I watched. I went on your. I guess you have a little some seminars that you had done in the past. So I've watched some of those, and I see
Yeah, nice.
some of your speakers. Very. I'm still absorbing everything. I love it. I think it's a great strategy. It's not intimidating because once you have the knowledge, I feel like it's a no brainer. It pencils out, makes sense.
Yeah.
Because cash flow is everything, and knowing as a landlord, like when they call me and say, "Hey, my AC's out," in my mind, I'm a troubleshooter, so I know maybe it's the capacitor. So I have boots on the ground. I call them and I say, "Hey, check the capacitor," and that but I've gotten that call on the 4th of July. And I was like, oh, if it couldn't be a worse time,
Right.
but I don't want to get those calls. I'm right now. I'm 56. I'll be 57. I'm just. I don't want. I can't see myself in my late 60s answering calls like that.
Right. Welcome to Property and Paper Live. This is Dawn Rickaby, your host. I'm so happy to have you here. If you're on YouTube or podcast, please go over to notequeen.com and sign up to be on a newsletter. You can join our private community, and you can be a citizen of the realm. And that's totally free. That's a very fledgling community, and that's the place where I host the entire replay. The one you're listening to now is going to be about the first half of the call. So you don't want to miss out on the rest, because we always have such juicy conversations and real, and we're not holding anything back here. It's just like, here we are having a mastermind, stumbling through life and sharing our wins and our knowledge with each other. So anyway, we've been going here for a minute, and now Adam, go ahead. What do you got?
Well, I'm prepping to take an ibuprofen, so let me quickly swallow that. Um,
Yeah.
a little shoulder ache. Um, my wife and I own a triplex in Los Angeles and
Yeah.
have decided that it's a good time to sell. And so we're getting ready to market and thinking through some of the learnings and lessons that you've brought. I'm thinking about how to potentially sell it, do seller carry. The basics of the deal are that it will probably sell for about 750 or so. We have current loan on it of about 375.
Mm-hmm.
And when we bought it, I borrowed about $175,000 from my wife. So when it sells, she's supposed to get paid back and then pay back the standard mortgage, and then that's kind of the rest of the money that we got. But I'm not sure. We might find somebody who wants to buy it and put down a smaller down payment. Maybe we carry some of it, but with only about that much equity in it, of figure 375,000, I'm struggling with how we would do a seller carry without coming up with some cash ourselves to close out that first mortgage.
Yeah.
So any other thoughts that might be suggested, I would appreciate it.
Very good. And you're a teeny bit garbly, going in and out a little.
Okay.
I'm just going to repeat it. Adam's got a triplex worth 750, and you've got a first of 375 plus the 175 that you borrowed from your wife to buy it. Am I getting that right, or is
call it a quiet second? Yeah, call it a silent second, if you will.
Boy, that was recorded on your flesh, I'll tell you that. There was not in public record for that. But basically, you're encumbered at plus 175, yeah, minus closing costs. So maybe, what are you thinking you'll get away with this, 150?
Yeah, not a whole lot, but the 150 plus the 175, that's going to be our net back, and that's okay. So it's time to sell it. I'm just not sure if we can structure it in any way to do a seller carry. It's not enough of a gain to. We paid about 600 for the property, so we've got some gain, but after all the selling costs and everything, it's not enough to go through a whole 1031 to try to hide it and not pay taxes on it. So the question is, do I do an installment sale that defers those taxes out longer, or do I just let it be a wash and move forward?
Well,
I don't know how, but we'll see.
Yeah, I mean, to me, I don't know, other people can give their opinions, but like I would carry if someone came in with enough to pay off the first. I don't think I'd bring cash out of pocket to do it, or just sell it and take the some liability off. You know, you get your profits. You know, California isn't exactly having policies that favor things, you know, so it's depending on how, you know, what your portfolio overall is like. Personally, I would not take a small down payment or come out of pocket just to carry it. I don't know. But if I did carry, it would, I'd want I would want enough of a down payment, you know, at least half. So, you know, that's about that, right? But then, you know, then you got to figure out the opportunity cost. Do you guys know how to, if 250, 275 is coming back to the family, do you guys know how to make more than 5, 6, 7? Is there some debt you could pay off? Are there any hard assets that you'd like to position into as we
Yeah.
prepare for a very inflationary time? You know, it'd be what's the opportunity cost you're leaving on the table? Just because I love owner financing doesn't mean every deal makes sense for that. Yeah, I just have read the more things I read and things, I'm just like, whoa, I'm not sure if I was a first time home buyer or something, I would say, let's go ahead and spend $1 million and stretch to get in our first home. You know, I don't know. There's a lot, there's crazy prices. I was talking to a client of mine in Florida, and they have the same kind of rents and property prices practically as Silicon Valley in the Bay Area. And I was like, good Lord. So you know, there's still places where things are absolutely crazy. And parents are giving money to the next generation to give them a chance to get in. That's the only way that they can do it. The older generations, the boomers, have to give up some of those juicy gains that, you know, that we got through monetary policy and good times in the nation, you know. So I don't know. But anyhow, so the topic, oh, and I just wanted to remind people now that we're recording, I did get an email from someone in the last couple of days, and it's like, you know what? It's really intimidating to be on the calls. A lot of your people know so much. I feel like you know, what I read between the lines is like I would feel stupid to ask the kind of question that I really need to have. And I just want to remind you guys that the point of this call is for the beginner. But if no beginners ask questions or email me in advance or chat it or something, that I don't know that you have the question. And I know it's embarrassing, but I just you know, it took me 7 years of hanging around this conversation before it was just second nature. And I asked a lot of questions over and over and over. So please don't be embarrassed, because I guarantee if you have the question, there's a bunch of other people that have the same question and they're not on the call live, or they're just too embarrassed to raise their hand and say, excuse me, can you just explain that one word that you've been using for the last half hour? Right. So, but you know, I just want to just remind people, please engage. And if you don't want to come on live, put it in the chat or email me privately in advance of the next calls, because I really want this to be a friendly place for beginners. But if nobody else pipes up, then those of us that show up are just going to talk about, you know, what we're doing. And so let me stop for a quick second. Does anyone who's come on in the last couple minutes have a question or a topic?
Can Adam do a short-term rental or Airbnb?
Oh, thanks for piping up. Is it Zed?
Yes.
Hi, Zed.
Hi, Don.
Go ahead, Adam.
100% no. Yeah, 100% no. It's a multi-unit property in the city of Los Angeles. It's illegal to use any short-term rental less than 29 days.
Wow.
And tenant rights for any tenant that's been there for more than 30 days is essentially a lifetime tenancy. And it's in an area that has an extremely anti-landlord attitude. And it's time for Adam to exit stage left or right or stage back, whichever stage exit I can find.
Yeah.
Makes sense.
Yeah,
Yeah.
which is interesting because with Pat Jackson, I exchanged into a sixplex in St. Joe, Missouri.
Mm-hmm.
We're turning the whole thing into short-term rentals,
Mm.
and basically it's going to be a more like a motel in a neighborhood, and nobody seems to care at the moment.
Oh, well, that's great.
Right.
Yeah, here that just reminds me, they in Carson City, all of a sudden they've woken up to wait, there's short-term rentals. Who has a license? Nobody has a license because they don't have a license. Right. So then they're all like, how dare these people? How dare these people exercise their property rights and do things? We need to be getting money, and we need to be zoning and telling them where they can have them and where they. I was like, oh my God, here we go. So we've been running ours for a while, and it's like, you know what? I don't know what's going to happen, but you just have to always know, be watching the regulatory risk that you have can take down your business, right? So if they make it untenable, or they say, oh, where you have your Airbnb, it's not allowed or something, I'll just go to minimum, 30-day, monthly, minimum. And there's plenty of those people. I mean, it wouldn't be my favorite thing, but there's plenty of those people that they're relocating, they're on job assignments, and they're
Traveling nurses.
traveling
Yeah.
nurses. The legislators here come every other year for 5 months. So I'll just change it probably into that. But you always got to be thinking everything's phenomenal. And then something like, oh, the city wakes up and says, how dare these people? And they haven't even had a process. There's no short-term rental license to even buy. And I'm just like, oh, okay, since I like to, I like to ask for forgiveness rather than permission. It's like,
Mhm.
I'm going to just go ahead and exercise my property rights to do, blah, blah, blah.
Well, the other piece to that though is that if you can get any kind of permit or whatever, like these ones in St. Joe were actually paying room tax voluntarily, and is to get yourself grandfathered in, because as they change the rules, it's a little harder, or when they write the new rules, they tend to give priority to people that are already grandfathered in at times, but it just depends on every political entity.
Yeah. Yeah. So, so one thing we're doing is just like, okay, that income that we assume will just keep going, there's always points of failure, third-party risk in almost everything that you're doing. So just to be aware, okay, that could be coming. And if so, what will I do? And in the meantime, hey, let's start collecting a list of people who stay with us repeatedly, in case we, go to just managing it privately, by referral only, or something like that, or just people that have stayed with us before, or just go to the monthly thing and just not overcomplicate it. But anyway, interesting.
One more. How about a nursing home?
Oh, nursing home. Are you talking about for the triplex?
Yeah, nursing home, or those homes where people are rehabbing from addiction.
Right, halfway house kind of thing.
Yeah.
I think this is to you, Adam.
So I have two of the three units are rented and one is vacant. The two units that are rented they have lifetime tenancy rights. So I can't evict. Now, there is a rule that says that in California you can go out of business using something called the Ellis Act, but that also means that you have to pay each person about $30,000, and you can't re-rent that property as a rental for at least 2 years. So
2
could convert it
years.
to be something else. Yes,
Okay.
yeah, it's punitive.
It's time to hightail out of California.
Yeah, back
Well,
to my original.
and yeah, and to answer Don's kind of earlier question, what would we do with the money? The plan is to take that money from there, free it up, and clean up our other rental properties and sell out of state or just sell it maybe just because every 3 months the legislator here is making it more and more uncomfortable for a small landlord. It's time to change.
Yeah, so I think you said you're planning to fix up other rentals that are out of state. Is that what you said?
Now, fix up ones that are. I have some rentals in Los Angeles that need work, like
Oh,
between
gotcha.
$20,000 and $50,000 each, and then
Got it.
prepare those to also be sellable. So the plan is take the money from the first one, fix up the others, then sell those. Those ones have even stronger equity positions. I mean, I have some with like 20% loan to value ratio. So maybe I can do a carry on some of those. But
Yeah, it's just
yeah, gotta stop being a small time landlord.
yeah. So my point is I'd be rolling out of California, but like if on those high equity ones, but I wouldn't carry in those situations unless I got a big down payment. I would not take a small down payment. I would take 40% plus if it was me, just in case
Yeah,
there's even
yeah,
more problem or additional collateral. Like if you don't want the capital gain from a big down payment, just see if they'll put up additional collateral so that you're, you defer most of the gains, but you still have enough protective equity to make it sensible. Does that, you follow?
yeah, yeah. I follow what you're saying.
Yeah, it's like, okay, what else do you have that you could, if I'm only going to take, 15 or 20% down, so I don't have to pay all the capital gains, what else you got with good equity, strong first position equity that you could put up as additional collateral? So just a thought there. Um, but yeah, the writing on the wall for this stuff. Anyway, a lot of times when I'm talking to people, they're coming into contact with the idea of owner financing for the first time. It's like their minds are blown because the myth prevails amongst so many people that owner financing is only for bad credit risk, so for crappy properties and crappy buyers, right? And why would anyone do that? Why would any seller do that? And so I always just tell these stories of, well, as it happens, the first property that we bought, this is many years ago now, but that besides our primary residence was a commercial building that was just a couple blocks down the road. And our little four kids, their diaper butts and their pitter pattering and everything around the house, it was kind of hard to work. So we needed a studio away from the home so some actual productive work could get done so we could pay the rent every month. So, anyway, we'd go to the boba shop and we'd walk by this building all the time. And one day we noticed a little sign in the window and it was handwritten on a 8.5 by 11 white piece of paper taped, for sale, call John. And I'm like, we don't have any money, but I'm going to call John, anyway. So one thing led to another. And I think the price of the property was something like $300,000, give or take. And I said, well, how much are you going to need? And he said, well, right off, I'm not going to take all cash. I'm just going to tell you that. And I go, oh. So him and his wife, Pat, who wore a purple knitted beanie all the time, and they ran a travel agency, and there was papers and magazines everywhere, stacked up everywhere. Anyway, they said, this is our primary retirement vehicle. In fact, they paid off their commercial building to get it free and clear before they paid off their personal residence, because this was their retirement plan, like the core. One of the most important pieces is they were going to carry so that they could defer capital gains. They could have good income for retirement. They were going to charge an interest rate that was double what the going rate for a CD at the bank was, and it was still a fair rate. And they wanted to leave a great inheritance, right? So they wanted the income. So this was their plan all along. And they wanted 100,000 down. And I said, well, we don't have 100,000. I probably didn't even have 10,000 I could have put down right then, right? With just at the time in my life that it was, and all these 4 little kids, running around, and minivans and kid seats and sandwiches in the morning. So it's, the whole bit. It's so, gosh, it seems like a long time ago. But anyway, they said, well, honey, if you can come up with $50,000, we'll carry the rest for you. And so my mom loaned us $50,000 for the down payment. And anyway, the big negotiation I did after, these spending a few years hanging around at no conferences and things, it's like, I said, well, it's going to take us a while to fix it up so that we can actually rent it out. There was 3 units and we were going to owner occupy one, and the other 2 tenants would cover the principal and interest on the mortgage. So we would basically be renting for taxes and insurance, which was much better than, paying $1,200 a month for some crappy little square box somewhere. So we went bigger than what we needed. So anyway, I just said, can we have half the interest rate and half the payment for the first 18 months? Because we're going to need to put a lot of money in it to get it up to par. And they said, okay. So basically we had half the regular payment and half the interest. And so they charge us 7% interest. They could have gotten at that time, I want to say 3.5 or 3.75 at a CD in the bank. So they were going to do double what their next best opportunity was. And they were deferring capital gains, right? They didn't write the IRS a big check at closing, and they had great income. But that 18 months of the interest rate made it so that it was almost like $20,000. Before we went to the regular long-term deal, we were able to pay down $20,000 extra principal just by asking for just a short time of a smaller interest rate. And so that helped us in the long run too. So, and what they did is, and they could at that time, because it's a commercial building, they put a prepay penalty. Why did they do that?
They don't want to be paid off, just like me.
Yep. Because if they get paid off, what happens?
They share it.
Hmm?
They share it with the IRS.
Yeah, the IRS has to get their piece, right? Since this was their primary retirement plan, they were going to do everything to protect it. And they just lived a few blocks away, just like we did. So it was all everyone's very close and watching over the property and knows what's going on. But anyway, so it was a 30-year amortization at 7%, due in 15, with a 20% prepay penalty if I paid off early. But that worked out great for us because, look, it was no money except for we had to come up with the money for the rehab, but my mom put up the money. I had some investment that happened from a job I worked at previously that all of a sudden, and I put it in something. I must have put it in like GLD or some gold miner or something. And just, it happened that it quadrupled in value, and that's what paid for the rehab. I took that out. I had to roll over from a previous job. 40,000, it turned into 160,000, and boom, I had money to rehab the property with. So, anyway, but just saying that, and I tried to get around that prepay penalty because we had to sell and we moved, out of the area. And I tried like the Dickens. I say, look, tried to get him to take an early payoff. His parents had died, so the son that was supposed to inherit everything tried to get get him to take a little bit of a short payoff. Hey, we came into some money, and he just wouldn't take it. And we're going, dang it. So we had to pay him the extra, 20% penalty when we sold. But the property during that time, I think it went from 300,000 to 900,000. So I don't know. We did all right. But anyway, the point I'm making there is I just want to bust the myth that people won't carry. And why would they? This is a perfect example. I don't know. They just don't, they kind of broke the mold of this, because it seems like if a lot of these older folks, that it's just been in their blood. This has been their plan all along, to build up a small portfolio of free and clear properties, manage them themselves, work hard, right? And then when they get too tired or they're unable to do all the repairs themselves, then they turn their real portfolio into a paper portfolio. And usually they net about double every month, right? Because, well, the appreciation made the house go up a lot, and also they don't have property taxes to pay. They don't have insurance to pay. They don't have surprise maintenance and repairs bills to pay. So this, for the people that know, this is really, it's just a no-brainer to them. You don't even have to talk them into it. They're like, it's just obvious. So any comments, questions, or other stories from other people?
I can just share my one broker story where I was teaching real estate principles, and I had taught the agents that all, as per California law, all offers have to be presented. And they saw this cute house that they liked, and they wanted to offer, this was at 11% market, this was back in the 80s, but they wanted the seller to carry for 30 years. Seller was 88 years old.
Yeah.
And so, but they said, you got to present all offers. And I went in, I presented the offer. The guy looked at it, went right through it and said, I'll take it. And which, my first question is, why would you do that? And he said, I don't need cash. What would I do with it? And I don't want my kids to inherit cash. He was basically estate planning, through that seller carry.
To give them cash flow instead of,
Exactly.
instead of a lump sum that they'll go through really quickly. Well, he may not have known about selling notes, right? Because they'll go, oh, let's sell the note.
and that's up to them. But he was doing it his way. As it turned out, he still lived about another 5 or 6 years, and the house was sold, that people refinanced it because the rates had dropped. But still, it was my wake-up call to never assume what the other party is thinking.
Well, and Dave, you're making loans and buying notes that you plan to leave to your kids, right?
Yeah.
And so it's just a way to manage the money. And it's funny because people don't they don't think, oh, I've got to sell all of my real estate before I die. But they think they can't carry a note longer than how long they think they're going to live. And I was like, why? You're leaving it to the next generation anyway. Right. And, to that story that you told, giving them cash flow, things that help them live and not have to manage a property. A lot of kids, they inherit it and they're like, yuck, I want nothing to do with this. And they get rid of it as quick as they can, and often at a discount. Thank you so much for engaging with my content. If you'd like to participate live and hear the rest of the replay, please go over and join our free community, citizensoftherealm.com. Hope to see you around the queendom. Take care.
So I have some rentals, and at some point I would probably be interested in seller financing, but I know my underlying mortgages are not going to be paid off at that point in time. And I'm wondering, I hear people talk about selling subject to the existing mortgage, and some people are like, oh yeah, go ahead, the banks never call the loan, and other people are like, no, that's not true. They're doing it more and more, and I'm just wondering what your take is on that.
I love the way it pencils out. It's a win-win situation. I think people are afraid of what's not traditional or what's not what they've been taught. They usually used to abdicating responsibility to others, and they don't feel that they're smart enough or why. But we don't have to be the smartest, right? We could use you, and we use other people that are smarter than us in certain areas.
Right.
But I'm okay with that because I've been doing that all my life.
Take this information and go out there and create financial solutions, just one mom and pop to another. See you next time. Take care, everybody.